Hello, everyone. We're going to be discussing the monthly market reversals and the current trend that monthly market reversal is in. When we look at the charts here, as we already know, each candle is representative of the time frame that is indicated in the chart. So as we can see here, the D represents day, so this candle represents 1 day. Now, when we're trading, we're always trying to get in position to where that we can identify what they call the ceiling and the floor. And I heard one gentleman say, when is the ceiling no longer a ceiling? And when is the floor no longer the floor? And the answer is when the ceiling is not a ceiling and the floor is no longer a floor. So it's the same answer. Now, I know that sounds asinine, it sounds, crazy, silly, whatever it is you're thinking right now, but the whole point is to keep a simple understanding, and that is the market is only going to go as high as it can go at the moment, and it's only going to go as low as it can go at the moment. And whatever that height is and whatever that low is, that's the current ceiling and the floor. So when we're trading, we want to use a big time frame. The high time frame always takes precedence over anything lower. So we want to start identifying the monthly market reversal, as I call it, by looking at a 1 month chart. So we're going to type number one and then M, and that's going to give us the opportunity to see candles that represent a full month. So now that we're looking at candles that represent a full month, we can see the euro dollars in the background, and we can see M representative of the full month. I'm going to go ahead and blow this up here. And what we want to do is we want to take a green horizontal line, and we want to put that right at the top of the monthly candle. Now, the reason why I use green as a horizontal line is because green is representative of money. As we can see, when a green candle is created, it's representative of the market going up. When you and I receive money, our bank accounts go up. So I use green to represent the top of the monthly market reversal. I then turn around and I use red for the horizontal line at the bottom of the month. Again, there are already red candles. When the market goes down, pointing towards the bottom, candle turns red. When you and I are depleting our money, account goes down. So red represents down, and so that's why I put that at the bottom of the market here. Now, why am I doing that to the top and the bottom of the wick or the wicks of this candle? So when we look at a candle here, like this monthly candle, this red that we see here is representative of the body of a candle. The very top and the very bottom are wicks, and we always want to put horizontal lines, a green horizontal line at the top of a wick and a red horizontal line at the bottom of the wick. And the reason why is because wicks represent the highest time or price point at which institutions, meaning banks, insurance companies, and investment firms, could continue to buy from novice traders who are selling. When they can no longer buy from them, they then turn around and they reverse the market by selling what they did buy, which then starts to bring or push the market and its price point down. And as they're selling and the market's going down, they have to sell to buyers. And when they can no longer sell because they cannot find any more buyers, they then turn the market back around and they start buying again. And they keep doing this process over and over again. So currently we can see this is the highest price they can get, 14 and 12 pips. This is the lowest price that they could buy for, which is $1.11 and about 79 pips here. So when we're looking at this here, we're looking at what the highest and the lowest was for the month. Now, in order for us to truly verify whether or not this is the top and the bottom, I like to use the 2 month and the 3 month high time frame to show the integrity of the prices that are chosen here on the monthly candle. And when I say the integrity, I'm talking about the truth. What is the truth about the highest point and the lowest point. We want to find some consistency. Truth never changes. And so since it doesn't change, we need to find some consistency in these prices. Now, the way I'm going to do that, and the reason why I'm going to do that, number one, the way I'm going to do it is by looking at the 2 month and 3 month. And the reason I'm going to do it is because right now this is March and this is the middle of March. So this candle right here doesn't represent all that has occurred in the month of March. So we have to use more information. And so what we're going to do is we're going to take, since this is March, this is February, we're going to take March and February, which is the last 2 months, and we're going to put them together and we're going to see what we get. And then we're going to take the last 3 months, January, February, and March, put them all three together and see what we got. And we need to come out with some type of average. Okay. So let me go ahead and put the 2 month candle. Okay. Let me try that again. I'm going to type number 2. And if I only use the numbers, as you can see, it's minutes. So I need to put the letter M. And now you can see it changes to a 2 month interval. I hit enter. And of course, we have 2 months. And now the two candles that were next to each other in the 1 month chart are now put together here. And what we see is that there is some integrity. There's some consistency. So it looks like we're good so far. So let's see if we're still good if we use a 3 month. So we type the number 3, type in M, hit enter. Uh-oh, no more integrity, no more truth, no more consistency. So what am I going to do to make sure we have that throughout? I'm going to lift up this horizontal line and put it at the top of that 3 month candle there. And then I'm going to go down the chart and see what that integrity looks like as I go down. So now when I go down to the 2 month, what I see here is when I had the green horizontal line at the top of this candle here, it wasn't truly representative of the highest price. This is where I should have put that. And then when I go down to the 1 month chart, I can see this is where I should have put the green horizontal line, and the red horizontal line was already in the right place. Now that I've been able to identify the highest point of the monthly market reversal in the zone or the area in which institutions begin to sell, and I've also identified the lowest point in the monthly market reversal where banks began to buy, I now want to identify which way are they going next. And what I do very simply is I go down from the 1 month, I cut it in half, and I go down to 2 weeks. And when I go to 2 weeks, I can clearly see what the trend is. And how is that? This right here indicates that the institutions came up here to this highest point again in the monthly market reversal, came all the way down to this price point here, and what goes down must come up. And when it gets up to whatever the new ceiling is going to be, what goes up must come back down to whatever the new floor is going to be. And so this is how you can easily identify the overall trend of the monthly market reversal. Now that I know the trend is up, I need to make sure I'm looking at the correct prices over here. There's three different prices that you can always have indicated on a chart, and you can find that up here. It is called the ask price, the bid price, and the mid price. The ask price is the price that sellers are asking for. It's like going to a car dealership and seeing the sticker price on a car. You're going to see on there the phrase asking price. That is the price that the dealership is willing to sell the car for or wants to sell the car for. We have bid price as the second option here. Bid price is the price that the buyers will pay for that particular currency that's being traded. If I go to a car dealership again and I see the asking price on a sticker, I'm going to talk to a salesman and I'm going to ask that salesman what he thinks about my bid, because I'm going to put a bid in and I'm going to try to negotiate a cheaper price. So bid is always associated with buyers. The mid price here is an average of the two. And I'm going to encourage you to stay away from mid price. There are even some brokerage firms that you're not even allowed to switch it back and forth from ask to bid. You can maybe see the the sell and the buy price, like you can see up here, which is the ask and the bid price. But I want it on my actual chart so that when I'm charting accurately because I'm expecting the market to hit a certain price point to trigger my trade. And if I don't have the accurate price, my trade can actually get what we call wicked in and not triggered. And I've even had trades where a full body of the candle will go through my trade and still not trigger my trade because it was not able to cover the actual price nor the spread that brokerage firms are wanting to get paid when you get a trade in. And we'll talk about that in another tutorial. So again, mid price is the average between the two. So again, ask is for sellers, bid is for buyers. Now, if you can't remember that little car dealership story I just gave you, then understand that bid starts with B, just like buy starts with B. So if you can remember bid goes with buy, then by process of elimination, ask must go with selling. And if you can't remember that, here's the last little bit that I can give you, and that is when I'm looking for the sell price or the price at the top of the market, I can select the option at the top. If I'm looking for the price at the bottom of the market, I can select the option under this right here, which would be considered kind of like the bottom. Because remember, we're never going to use mid. So this is the top and this is the bottom. Ask is the top, bid is the bottom. So if I ever am looking for pricing up here, I need to select ask. If I'm looking for pricing down in this area here, I'm looking for bid prices. So since we're trending up, we're going to be moving up, we're going to be concerned with what is the asking price, the selling price. So let's go ahead and select that to ask. And now we're ready to go to the next step of identifying clearly what is the area. We know what the highest prices are at the top and the bottom, but we need to find the area at which we believe the institutions are going to start turning the market around. Well, there we have it. The monthly market reversals, how to identify them, and also how to identify the current trend within that monthly market reversal. God bless you guys, and we'll see you on the next one.